What's up, guys? Welcome to another video. If you're new here, please go ahead and hit that subscribe button down below. And if you find this video insightful, I'd really appreciate it if you shared it with your friends. Now, in this video, I'm going to be showing you guys how we can filter for and trade the highest probability setups using relative strength analysis. We always want to trade the strongest pair and make sure we aren't caught in the weak one. This is a huge issue I used to face, always finding myself in the weaker pair, not being aware that the highest probable trade setups come from trading the strongest pair between two closely correlated assets. So here is a handy graphic I made showing you guys the correlated assets. So if you're bullish, you want to trade the stronger asset. If you're bearish, you want to trade the weaker asset. So I'm going to show you guys a few different ways of determining relative strength. You can choose whichever. No way is better than the other. Really just pick whatever you understand best and what you just tend to naturally gravitate towards. So I'll be going over 4 different ways. First one is candlestick logic, or CSL for short. Then we have SMT, stands for smart money technique. Then we got EURGBP and AUDNZD. We can use those two currencies to determine relative strength. And lastly, my personal favorite is the currency futures, which I will go over towards the end of the video. So let's begin with candlestick logic, or CSL. If you're trying to trade between two pairs with the same setup, how can you pick the high probability pair for longs? We can simply look at candle bodies and wicks and note, do we show respect, or are we disrespecting important higher time frame levels? But what does respect look like in the first place? Let's say we are bullish, for example. We can observe respect to a level when a candle presents a large wick off of a key point of interest, or POI for short, and a body closure above it. So for example, we have a fair value gap, and when a candle trades into it, it paints a lower wick and a body closes above that gap. That's a signal of strong respect. Or for example, let's say we sweep a swing low in bullish order flow and we paint a large wick below it and the candle body closes above the swing low. So these wicks show that price failed to close and displace below a certain level. So they show intention to push higher and a lack of intention to continue lower. Always remember this: wicks do the damage, the bodies tell the story. So now that we know what respect is, what is disrespect? Let's again say we are bullish. We can observe disrespect to a level when a candle body closes beneath a POI. So for example, we have a bullish fair value gap. A candle trades into it and closes below the fair value gap, indicating a disrespect of that level. Same goes for a swing low. If we are having candle bodies close aggressively below it, we are likely disrespecting that swing low and running it rather than sweeping it to then continue higher. So what do we do when we see two closely correlated assets with similar setups? How do we choose a higher probability trade? Well, we observe on the higher time frames which chart's price action is showing the best respect to PD arrays in line with our current order flow. So let's look at some examples to visually help see what I'm talking about here. So here we have CHF-JPY on the left and CAD-JPY on the right. If we look at these weekly charts and our higher time frame points of interest on these weekly charts, those would be, first off, this weekly fair value gap right here and this weekly fair value gap right here. So remember what we learned about respect and disrespect. Respect is when we're showing large lower wicks off a POI, should be this weekly gap, and body closures above the fair value gap, or at the very least high on it, right? We don't want to see deep closes down here or below the 50% level even, which is the consequent encroachment. That is what we call the midpoint of a fair value gap. Whereas if you look at over here on CAD-JPY, we are showing more of a disrespect towards this weekly fair value gap right here, with a smaller lower wick and a full body closure below that weekly gap. So what this indicates right here already on the weekly chart is CAD-JPY is weaker than CHF-JPY. solely because the way we're respecting this weekly fair value gap, we are closing below it here and we are showing a large rejection off of it with a high body closure on that gap. And then what we could also observe over here is large expansion to the upside, creating a new weekly fair value gap, while over here we have no weekly fair value gaps created, right? And that is coming as a result of what we observed right here initially. The fact that we respected this weekly gap to a greater degree than this weekly gap, which we disrespected. So naturally, our expectation here, if you just move back in time off of this, let's say this is current price action, we would want to focus for weekly IRL to ERL from this weekly gap to this weekly swing high right here. We would want to focus on the left right here on CHF JPY because it is showing the stronger respect to that weekly array. So this is when we want to focus on trades, and we can remove CAD JPY from our watch lists. So here we are on the daily chart of those same two assets we were just watching on the weekly chart. We can very clearly see why CHF JPY was the better choice to long, right? If we look at this daily fair value gap right here, we saw a very shallow sting into this daily gap, whereas if we look at CAD, we saw a very deep sting into that fair value gap, right? And off of this daily fair value gap, we started creating new daily fair value gaps to the upside, displacing higher and respecting those gaps. Right here, we see new fair value gap created, respecting it, and then pushing higher, ultimately taking that weekly external range high. Whereas at the same time, if we look at when we took the high, we are now displacing lower and kind of in this chop right here on CAD JPY. Just overall not creating new daily fair value gaps out of this daily gap right here. And we knew this already way down here based on how we respected this weekly fair value gap and disrespected this weekly fair value gap. Just reading the candle bodies, reading the candle wicks, we could already come to a conclusion as to which is going to be the stronger pair and the higher probability longs. So one more example here, we have Euro CHF on the left and we have GBP CHF on the right. One thing I want to mention about CSL is that it's not only all about disrespect and respect candles. You can also tell by the amount of displacement you can observe between two correlated assets, as well as how close are we to relative lows between each other and relative POIs. So what I mean by that is, well, if we look at this displacement all the way down here, we see that these fair value gaps are setting price much lower relative to this low right here. So if we compare where price is right now to this low, we see that this is likely going to hit it first, signaling more weakness compared to its counterpart right here, as well as we are respecting this daily fair value gap to a greater degree than we are over here, where we are disrespecting it on GBP CHF with this candle close above and just overall not really respecting that gap. Whereas if we look at Euro, which has been weaker, we are not closing above it. We're showing wicks and a lack of intention to continue pushing higher once we start trading above it. And then as you can see, this has been followed by large displacement lower. And even going down to the 1 hour time frame, you will see a 1 hour entry present itself over here with a 1 hour fair value gap displacing lower off of a daily array. Whereas you don't see that entry pattern formed on GBP, as it is a stronger asset. You don't even want to be looking at this for shorts. You would be focusing on Euro CHF for shorts, and right here is a very textbook entry off of a daily array, 1 hour fair value gap displacing lower, entry at the opening of that fair value gap, stop loss at the swing high that created that gap, and then you just target a simple 2R, and this is a gorgeous trade. So now let's go over SMT, also known as smart money technique. Simply put, it's a divergence between swing highs or swing lows on two closely correlated assets. In other words, a crack in correlation. So naturally, when looking at two closely correlated assets, if we expect one to make a lower low, we would expect the other to make a new low as well. When one fails to do so, we have SMT. I look for this specifically on the higher time frame charts at key PD arrays. So we're talking fair value gaps, swing highs, swing lows, previous month's highs and lows, previous week's highs and lows, and previous daily highs and lows. To make it clear, SMT is just a confluence to a reversal. It is not the entire basis for a trade idea. Your trade idea must stem from a higher time frame point of interest, and if we happen to see SMT, then great, that's awesome. we can now use it to determine which closely correlated asset we want to trade. This is how we find relative strength. So what we want to do now is long or short the pair that has created the failure swing, as it is the relatively stronger or weaker asset. So if we're bullish, we want to trade the stronger asset. We want to trade the one that made the failure swings on the lows. If we're bearish, we want to trade the weaker asset, and we want to short the one who had the failure swing on the highs. So here we have Euro USD on the left, we have GBP USD on the right. We are short right here because we have daily context to the downside. We have daily IRL to ERL and daily IRL to ERL right here. Now, if you remember what we just learned about CSL, just the candlesticks essentially, how hard are we displacing compared to our counterpart? Well, it's a very obvious choice here, which is the higher probability shorts, right? So that's just a note on that. They all kind of just work within each other. It's kind of like a cycle. You're likely going to see SMT here based on how aggressive this displacement is. We might retrace into this gap, whereas since GBP right here is stronger, we might even just take this high and then continue lower, right? So they all work within each other, which is why I say just pick whatever you naturally gravitate towards. So back to this, we are on euro. So let's move ahead in price and see what happens once we retrace into that gap on both of these pairs, right? So there's the euro retracement, and over here is that GBP retracement, right? We took the high right here. So this high, let's mark that out, swept it, compare it to euro's high, which is this same high right here. We didn't take it. So on euro, we have a failure swing right here, whereas on GBP we have a new swing high formed. So there is a divergence on the swing highs. Now remember, we are bearish because we already had a pre-existing trade idea, right? We're not going short here because of the SMT. It's only a confluence to lead us to which is the higher probability shorts. In this scenario, since this candle right here failed to take the high, just showing overall weakness, we want to trade the pair that presented the failure swing. So euro right here is going to be the higher probability shorts. So let's just go to current price action and see how this ended up working out. So we see here, we see very nice aggressive displacement right off of that daily gap. Whereas on GU, we did see some displacement, but ultimately it's just not as aggressive and deep as we see right here on euro, right? So that's just a perfect example of using SMT to determine the weaker pair and higher probability shorts. So here we are on the 4-hour chart, and just to show an entry right here, we had this 4-hour fair value gap right here on EU. We also had this 4-hour fair value gap on GU, but remember, we always want to short the weaker pair. So your swing trade right here would go at that 4-hour swing low. You can put at the body highs right here, and you can target a 2R, which would land around right there. And if you want to hold runners, something that I do is you can scale 80% and then hold 20% for your runners. So you can scale 80% at 2R and then have some runners for this swing low right here, or potentially even beyond that if you have a high confidence in this continuing lower. But as you can see, compared to GU, we are showing further displacement down below the swing low, whereas on GU right here, we are not showing more displacement lower, and we are actually entering a weekly fair value gap. So a little area of resistance right here may cause an issue for continued shorts on GU. Whereas if we look at EU and go back up to the weekly chart, what we'll notice is there is no area of resistance right here on EU. See how we don't have any weekly fair value gap in the way, whereas on GU, we do have a weekly fair value gap right here. So we have SMT on these previous week's highs here, and ultimately this is why we are displacing much more aggressively on euro than we are on GU. So here's one last example, and I think this is a really great one showing how we can use it for shorts and potentially upcoming longs. So if we look at Euro CHF on the left, we see that this high did not sweep these highs, whereas on GBP CHF on the right, we did sweep these relative highs as seen on Euro, right? So right here, we have some SMT. So if we are looking short for a potential external range liquidity move to internal range liquidity move, like such, ultimately drawing towards that monthly fair value gap, we want to focus on the weaker asset. So we want to trade the one who made the failure swing, which in this case was Euro CHF. So from this monthly idea, let's dive into the daily chart and see if we can find a daily PD array to short from. And essentially, this is where we'll find our daily market maker models. And what we'll see here is that ultimately Euro CHF was the weaker pair as a result of the S&T. Now, remember how we went over CSL earlier in this video, and I was showing how we can basically just eyeball this, seeing that this is showing the more aggressive displacement, already trading lower towards this low and this monthly fair value gap, compared to GBP CHF, which wasn't showing as an aggressive as a displacement. This is why I keep repeating that all of this stuff really bounces off of each other. If this is weaker, it's probably because there's SMT. Or as we'll later find out, it's because the euro currency future is weaker than the GBP currency future. So it all works within each other, which is why I say just pick the one that you just naturally tend to gravitate towards and enjoy seeing. So we saw the S&T on the highs and understood that euro is weaker. We want to look at this for shorts. Now, if we go back to the monthly chart, we have new context on this monthly. So already went from ERL to IRL on the monthly. Now we can flip this and potentially start looking for longs. So think IRL to ERL. Same thing over here, IRL to ERL. But what are we seeing? What are we seeing on the lows over here with these candles? We're seeing SMT, right? If we go to the daily chart now, we'll see that price has now entered this monthly gap, whereas price has not entered this monthly gap over here on GBP. So we have SMT potentially inside the higher time frame PD array, which is that monthly fair value gap. Meaning if we start to see this shift to the upside, seeing daily fair value gaps displace higher, let's say something like this, and we do that over here on GBP as well, we don't need price to come down into this monthly gap to make this valid. We're already showing intention to push higher, and this is going to act as a stronger asset because of that SMT, where we have a divergence on the lows. We want to long the failure swing, which would be GBP CHF. So we would want to focus on this for longs should we get our entry pattern, which is simply a daily fair value gap displacing higher. Moving on to the third way we can determine relative strength is by using the pairs EURGBP and AUDNZD. So we can use EG for short and AZ to gauge relative strength between all Euro, GBP, AUD, and NZD currencies. So simply said, a bullish Euro GBP means euro will act as the stronger currency over pound. A bearish Euro GBP means euro will act as the weaker currency and pound will act as the stronger currency. You see, the direction of the base currency, which is the currency that's listed first in a forex pair, determines if that currency will be stronger or weaker relative to the quote currency, which is the currency that's listed last in a forex pair. Same thing goes for AUDNZD. A bullish AUDNZD means AUD will act as the stronger currency over NZD. A bearish AUDNZD means AUD will act as the weaker currency and NZD will act as the stronger currency. So let's dive into some examples. So here we are on the Euro GBP weekly chart. As we can notice, we've overall been bearish in bearish order flow respecting bearish PD arrays. So naturally, we can form the expectation that EU is going to be the weaker pair and GU is going to be the stronger pair. We can see that same story being told on this daily chart with, again, bullish order flow off of this weekly gap, just continuing to displace lower, leading us to understand weak EU, strong GU. So again, if we look at EU and GU, we'll notice that because of our understanding that EU is going to be weaker, and we can already frame a short idea for EU off of this daily context. Remember, same thing for GU. We know that EU is weaker because EG is weak. So now we can choose the higher probability shorts, which would be Euro. And the low probability shorts would be on GU right here, which is relatively stronger. And if we zoom out even more to the weekly, we'll see that because EG has been weak, GU has been strong. So we see a weekly fair value gap right here where we don't see that on Euro. Just again, showing us this is weaker. And if we want to take it one step further, going to the monthly chart, we'll see that GU is holding a monthly fair value gap right here, respecting it with this large lower wick and this body closure above it. Whereas on EU, we also had a monthly fair value gap, but we're currently disrespecting it. See right here with this body candle closure below the gap and a smaller lower wick compared to GU. which again goes back to candlestick logic, where we're looking at disrespect and respect of candles. I keep repeating it. This all works off of each other, right? We had SMT, which signaled, okay, euro is going to be weaker. Okay, then we had EG signaling to us that euro is going to be the weaker pair and GU is going to be the stronger pair. Okay, great. So you see how all these things work off of each other? The candlesticks, the SMT, the EG, and we'll go over an AZ example next. But they all work off of each other. So again, just really pick the one that suits you best, because you're going to come to the same conclusion using whichever concept. So here we are on the AUDNZD weekly chart. Remember what we went over. If we have a bullish AZ, we have strong Australian dollar and weak New Zealand dollar. If bearish, we have a weak Australian dollar and strong New Zealand. So over here, let's analyze what happened and how we could have shifted our expectations for certain AUD pairs and NZD pairs and change our expectation in terms of relative strength, right? Because at this point right now, if we were to rewind right here, we would see that AZ has been quite bullish, meaning Australian pairs are going to be stronger and preferable for longs. But things change here, right? Because we had a weekly fair value gap with an overlapping old swing high. So let's move along and see what happens and if we respect that weekly gap, which we already know it does not, and we start closing beneath it and closing within this area of fair value. So what's happening here is if we're failing to offer fair value, well, we're likely to go seek liquidity. So we're starting to shift bearish here on AZ, meaning there might be a change in relative strength now, where you might see AUD pairs start to weaken and NZD pairs start to strengthen. And you want to shift your expectation and start trading NZD pairs for longs, as those are going to act as the higher probability trades for bullish setups. So if we play along here, we'll see that yes, AUDNZD starts shifting bearishly, creating weekly bearish fair value gaps, which currently, go to the daily chart again, has established that daily order flow. So we can observe that shift in relative strength right here, where we have AJ with weekly IRL to ERL, meaning we have context, but on NJ, we have that same IRL to ERL, but currently seeing that price has not retraced into it, showing relative strength here. This is also SMT, which we showed in previous examples, but we can also just remember use AZ, understanding that AZ is weaker now, meaning NZD pairs in the base currency are going to act as the stronger asset. So if we want to be longing, we would be looking over here. Moving down into the daily, we'll see how that shift occurred. Remember, we were very strong on AUD pairs until we had that shift on the weekly chart to the downside, where we failed to offer fair value. So if we look at this displacement all the way here, you'll see that we retraced not as deep as we retraced on NJ, but then we had that shift and NJ quickly caught up and overtook AJ as the stronger pair, eventually taking this external range high much before AJ did. Well, AJ hasn't even taken that high yet, and even displacing above it and continuing to displace above, forming more and more daily fair value gaps, which right here, potentially we got daily IRL to the ERL to the upside. Just continued bullishness on NJ, as it has been the stronger asset because AZ has been just so weak. Now, lastly, my personal favorite, currency futures. If you've stuck around until the end, I'm about to reward you, because this right here is real sauce that will absolutely skyrocket your win rate. Before I explain how to use currency futures though, let's list them all here so you can add them to your watch list and start seeing this play out for yourself. So we have 6E1 exclamation point, which is the Euro futures, followed by 6B, which is British pound futures, 6A Australian dollar futures, 6N New Zealand dollar futures, 6C Canadian dollar futures, 6S Swiss franc futures, and 6J Japanese yen futures. These are the majors. As we can see, this letter right here is the first letter of the currency we're working with. We can use currency futures to determine which pair is the one that's most likely to move. So basically, we are using these futures to identify the weaker and stronger currencies and then pairing them. We want to pair a strong currency with a weak currency. For example, right here, we have a very weak Japanese yen, and we have clear weekly context to the downside. This is great because now we have a clear draw on liquidity and we are working with an extremely weak pair. So now what we want to do is pair this with a strong currency. So we want to go through this list, pair it with yen, giving us our cross pair, and we want to trade that expecting the highest probability long. Because remember, when we have a bearish yen, you can expect any XXX JPY pair to be bullish. So let's look at the daily real quick. Also very bearish, showing daily bearish order flow. And right here, we're just expecting price to continue drawing towards this external range liquidity. So let's go through this list real quick and determine which is the strongest pair. So if we look at euro, we aren't very strong at all, displacing down. If we look at GBP, we will see that we are much stronger than euro because take a look at this weekly fair value gap right here. And also take a look at this monthly fair value gap, which we are holding and expanding higher out of. Where if we look at euro, like we showed in previous examples, we're not really respecting this monthly gap right here. We're disrespecting closing below it. So overall, euro has been weaker for a while compared to GBP. So we want to be focusing also on GBP in this case. So at the moment, GBP is our strongest pair. So let's keep this on the watch list. Let me just start fresh here. This will be our strongest pair at the moment. So let's continue on down. 6A, consolidating right here, not as strong as GBP. Overall consolidation on this weekly chart as well. We don't really have a weekly fair value gap there either, showing aggressive displacement to the upside like we see on the pound right here. So GBP still remains our strongest currency. Let's go to 6N, actually looking stronger than GBP. So we see that we have this weekly gap and we haven't traded into it, whereas on the pound we did, showing we have more strength on New Zealand right here. Just look at the daily real quick. Also, again, we haven't taken this low compared to GBP, where we did take this low into that gap. So at the moment, New Zealand is our strongest currency. So let's keep that on watch. So let's mark that up like that. Let's go to Canadian dollar. Not strong at all. Quite weak actually. Expecting lower prices here on a weekly basis. Also just extremely bearish. No signs of bullish order flow. So what you never want to do is pair a weak currency with another weak currency, which would be CAD and yen. That would lead to very unfavorable, nasty price action you want to avoid. So never pair a weak and a weak currency together. Moving along, we have CHF right here, which has been quite strong actually. So I'm going to mark that green and let's compare that again to New Zealand, which has also been quite strong. So at the moment, we are seeing the most strength on CHF just based on the displacement leg higher right here and respect to this daily gap. Let's look at 6N right here, which we don't see that huge displacement leg higher like we saw on CHF. So ultimately, at the moment, I will expect CHF JPY to be the strongest and highest probability longs. So let's take a look at that cross pair. And what we'll see is it indeed has been the strongest cross pair, as you will see once we go through these JPY pairs, showing the highest probability price action right here to the upside, forming a potential new daily fair value gap going into next week. So let's look at the rest and I'll show you why we want to focus on the strongest and weakest currencies and pair them together. Because if we look at NZD JPY, we're not as strong as CHF JPY because CHF was the stronger pair. So again, focus would be there. If we look at GBP JPY, even weaker, right? This was our third strongest. If we look at AUD JPY, even weaker. We haven't even taken this external range high and we are consolidating just like AUD was consolidating on its futures currency chart. CAD JPY, remember, CAD was also very weak. We don't want to pair a weak currency and a weak currency because then you get very disgusting price action like this that you just want to sit out. And then Euro JPY, which was also weak, the euro currency was also weak. We see very unfavorable price action because you paired a weak currency and a weak currency and you get very nasty stuff like this you just want to avoid. So always remember this. You want to pair a strong currency with a weak currency, and the way you determine relative strength is by always trading the cross pair that has the strongest futures currency. So simply put, if you want to look for a high probability cross pair to trade, which would be any of these right here in this long list, all you'd have to do really is go through the currency futures first, look for the weakest pair, then look for the strongest pair them up, and then you have your highest probability cross pair to trade for that week. If this all is sounding a bit confusing, because I know it could be a bit tough to understand on the first listen, if you just rewind and watch it slowly, take some notes, watch it again and again, I promise it'll start to click. This isn't something I think you guys should skip over. I really do think that this is a gem of information right here and will 100% increase your win rates, because just by trading the strongest and weakest currency, you are by default trading the highest probability cross pair for that week, right? So you're filtering out so much low probability price action. By doing this, you're going to be trading at the pair to be at for that week, right? You're less likely to be caught in unfavorable price action and consolidations, and likely to see very nice fluid price movement just by following these steps I've outlined right here. So that pretty much wraps this up. Thank you guys so much for tuning in. If you found this insightful, all I ask is you share it with a friend and hit the like and subscribe button. I would appreciate that so much. Thank you. And if you're looking to get funded, there are some really nice discounts in the description. Click those links, use code PICKLE, and using what you learned today, I hope you get one step closer to getting funded and receiving those payouts. And lastly, go ahead and join my free Discord. I'm in there every single day, dropping outlooks, doing live weekly forecasts every Sunday, and just interacting with the community and answering a bunch of your guys' questions. So I'll see you there, and have a great one, guys. Peace out.